Hello and welcome, friends, to our weekly seminar from Proficius. Myself, Shumoy, and today it is 11th of August 2018. Uh, Let us have a quick glance on how the global markets has performed lately, and after that, we will come back to our domestic market. Uh, this is the daily chart of S&P 500, the large cap index of US, and as you can see from my chart that there was a gap down opening yesterday, Friday, and market closed some 20 points lower. Uh, Now some global factors are playing on the US equity indices, mainly the trade war worries about US and China, and the looming interest rate hike by the Fed. So uh, these uncertainties will always be there. We are in a bull market. We are in fact in a raging bull market, and the market will rise during these uncertain periods. Intermittent pullbacks will always be there, as that has been in the past, but these pullbacks will be buying opportunities for us. As far as the daily chart is concerned, you can see the series of higher bottoms and the both moving averages of 50 and 200-day denominations. Prices quoting above all those moving averages. The slope of the moving averages are upward. So everything is perfectly in line with a classical uptrend. S&P is hovering very near to its lifetime high. So in a longer term perspective, although there is some short term uncertainty, but in the longer term perspective, we do not see much threat to the primary uptrend. Yes, interest rate hike there is an uncertainty about that, and probably there will be an interest rate hike. But market has pretty well discounted all these facts, and for the next week, unless 2800 is holding in S&P 500, that is where the last bottom was made. There is no point, there is no threat to the primary uptrend of S&P. So, having said that, let us open the dollar index chart, and this is quite surprising. The daily chart of dollar index, and as you can see, there was a huge rise in dollar index. This was in fact breakout above the 2-month hold consolidation zone. 95 was the level. Now this is quite clearly indicating that the interest rate hike is imminent, and it is still trading above the important moving averages, the moving averages that we had been watching for past several months, and much higher prices are ahead for the dollar. So dollar going forward is likely to continue its strength, and if that is the case, if dollar continues to rise in next week or the weeks ahead, what are the possibilities in the commodities those are denominated in dollar terms, mainly in gold, mainly in crude oil? So these commodities are likely to remain under pressure, right? Gold is already in an intermediate downtrend, trading below important moving averages. Series of lower tops are already visible on the chart of gold, and 1210 to 1220 regions are holding for some times now. but chances are high that these levels will be broken downward in gold. And the mm, let's see how the weekly chart pans out for gold. Yeah, so 1200 is the last support for this intermediate downtrend, and if 1200 level gets broken, then longer term target for gold becomes 1120, uh, that is pound, $1120 per ounce. So if there is a breakout, there is an upward breakout in dollar index, as we can see from this chart, and this surge upward of dollar index is pushing the gold prices lower. We are maintaining our bearish opinion in gold, and if 1200 goes out, that is if gold breaks $1200 per ounce region, then 1120 will be the longer term target for gold. Now let's see what happens in crude oil. Crude oil is also in some short-term weakness, although it is trading below the 50-day moving average, but 200-day moving average is it is still honoring, and in fact the slope is still upward. The series of higher bottoms are still maintained in crude oil, so it is not as weak as gold as of now. But last week saw some, at least Wednesday, at least on Wednesday, we had some 4% sell-off in crude oil. And this was pretty significant because this made 1 month low in crude oil. So short-term trend is also down for crude oil, and nearest resistance holds at around 68.7 to 69 dollar per barrel mark. Only if crude trades above this region, the intermediate downtrend will be subsidized. Otherwise, there is a high probability that crude breaks 67 mark, and in that case, 64 will become the intermediate target for crude oil, where the 200-day moving average resides, and that is some weak outlook in crude oil as yet. And not for only crude oil, not for only gold, in fact all other commodities, those are denominated in dollar terms, like silver, like natural gas. All these stocks are, all these commodities are likely to remain weak going ahead. So having said that, let us come to the let us come to our equity markets, our domestic equity markets. Let's see how Nifty have panned out. So this is the daily chart of Nifty. We had seen some sell-off, some weakness in the last 2 days of trading, and market as of now trading at 11,429. Now there are two conflicting signals. Although the trend is pretty upward, trend is strong, but yesterday we had the IIP data, which was pretty strong, and the IIP data was in fact highest in past 4 months. So this is the bullish evidence. This is the bullish case scenario that markets may take it positively, and the bearish case scenario is that there is an impending rate hike in US. So given these two facts, and given the evidence that prices are a strong uptrend, but a little bit overstretched, obviously, and it is ripe for some pullback as well. But these pullbacks will be sort of buying opportunities. And last bottom was made previous to previous week at around 11,230 region. So pullbacks will be buying opportunities. Overall stop loss will be 11,230 for cash Nifty. and 11,200 will also act as a support zone because it was the zone of a previous resistance. Market made a significant top here on third week of January 2018. So that support, that resistance has become now a support, and we are expecting some pullback in the early next week. And once the pullback subsidizes, Nifty does not violate 11,200 or 240 regions, prices are likely to resume the upward trend. Having said that, let us come to some of the stocks that we see can be traded from the bull side as well as the bearish side. As we have seen earlier that the market had been extremely narrow ranged, and only some specific stocks were moving, and these stocks were driving Nifty upward. In fact, some 10 or 12 stocks in large cap sectors were actually all responsible for moving Nifty higher, and that makes the case pretty difficult and pretty complicated, because if we miss those stock specific actions, then the rise in Nifty does not mean anything for us, right? So last week we saw some improvement in market breadth, although some large cap and mid cap stocks have established a bottom and they are trying to resume their primary uptrend. So overall, market breadth has improved a bit, but it is still far away from saying that the mid cap correction has been over, and the mid cap indices and the small cap indices are resuming their primary uptrend. So it cannot be told as yet, right? These are only initial signals, but there is no confirmation as yet. So the market is likely to continue stock specific. Breadth will remain weak, and only few large cap stocks will continue to drive the index, and we will have to be there where the action is. So there are some large cap stocks that I will try to show you for the next week. The first one is Reliance Industries, and Reliance Industries has given a significant breakout early July, or the second week of July, and the breakout movement is continuing. Some pullback is on the card, obviously, because stochastic is already overbought. The stock closed at 1204. Immediate stop loss could be 1170. So you have, if you buy it on a pullback, you have to keep a stop loss at 1170. And the recent top was made at around 1218. Once that top gets taken out, the stock is likely to ascend even higher. The next in line is the NBFC stock that I have said you many a times earlier. The Bajaj Finserv and the Bajaj Finance twins, they continue to rise. Yeah, this is the stock of Bajaj Finserv. Stock closed at 7,083, and it is another life high closing for this stock. Recently there was a very slight pullback, almost like nothing. It was a consolidation zone, but made a bottom at around 6,900, and from there it is also trying to ascend higher. So this stock should be in our focus, and this is a longer term play, and we have to keep a stop loss at around 6,900 level for Bajaj Finserv, and we have to trade it from the long side. All these long plays will be valid as long as Nifty stays above 11,200 region. So that is the point we have to keep it in mind. If 11,200 level gets broken for some time, then we have to exit from all our long positions. A very strong momentum stock is Havells. It has already made a significant movement, but the longer term uptrend is pretty strong, and there was a 6-month consolidation phase before this breakout occurred from January to July, and after that the stock broke out above 600 level. Havells is what I'm talking about. It broke 600 levels with strong volume. So right now it is trading at 670 regions, and pullbacks will be excellent buying opportunities for Havells because I'm showing you the longer term uptrending chart. Yeah, this is the weekly chart of Havells, and as you can see, the stock has risen by almost double in past 1 year. So that is enough to say how the nature of the uptrend is. And past 3 weeks was enormous. In the past 3 weeks, the breakout occurred, and the breakout is continuing. There is support of volume. So Havells from consumer durable sector is another stock that is always in our radar, and we will buy it if there are some temporary weakness. And you'll see the last breakout occurred at 600, so that is only the legitimate support zone, and that is pretty distant from here. So we will prefer to buy in installments. We will prefer to create a core position in Havells and try to adapt that core position, because right now it is not possible to trade with this much of stop loss. So buying in installment will be a great idea for Havells, right? Bata is another consumer durable stock that is striding ahead with tremendous force. Yesterday we saw another life high closing for Bata, and yeah, that is true. This is the longer term chart in Bata, and the breakouts are also pretty clear. So Bata is also stock to be traded from the long side next week. Current price is 976. Overall stop loss will be at 935 or 908. 908 region will be a better. So also buying on pullback will be recommended, but the overall uptrend is very strong, and it is likely to go ahead further. This breakout gap is what I will bring your attention to. This breakout gap occurred on 3rd week of July, and with this breakout gap, Bata actually broke away from its 2-month-old consolidation zone. So these breakout gaps are more significant to as far as the longer term uptrends are considered, and these gaps say that there are much more steam left in the movement. So these were the stocks to be traded from the long side next week, but nonetheless there are also some weak stocks, and as I told you, market is extremely stock specific. Only few stocks are rising, and the focus is very slowly shifting away from large cap stocks, but that is not confirmed as yet. But some stocks are continuing to make lower tops and lower bottoms, and these stocks are very good to trade from the short side. The most important of them is the Tata Motors, and as you might have remembered that we have identified this stock many a time earlier to be traded from the short side, and this is how the trend prevails itself, right? Tata Motors is in a primary downtrend for a many long time, but you cannot buy this stock just because the valuation looks cheap, right? It is okay to buy cheap, right? It is okay, we all try to buy cheap, but it is not okay to buy in a downtrend. Some of you have asked whether Tata Motors can be bought or Tata Motors TVS can be bought. So my answer is that no, Tata Motors cannot be traded from the long side. Whatever be the price, we have to believe in the trend, and Tata Motors is in a downtrend. So we have to only sell it on rise. And last top in Tata Motors was made at 270 odd levels. So any pullback to 260 or 265 would be sold short, and yesterday's closing was just on the nick of 250 region, and it is another 4-year low. So stock is in significant downtrend. Pullbacks will be selling opportunities. Overall stop loss will be 270 odd levels. Let's take a look at the stock of Bajaj Auto, right? And there was some fundamentally bad news for Bajaj Auto, and after that the stock has given up nearly 20% of its value from the July top, and it is actually in a downtrend, right? So Bajaj Auto, like Tata Motors, is also in a primary downtrending territory, and right now the stock is trading at 2630. Last stop was made at 2700. So you can sell Bajaj Auto with a stop loss at 2700, and the lower prices are expected for the stock. Lupin, we saw significant weakness in Lupin, although the stock is trying to end its primary downtrend. The downtrend spanned for nearly 2 years, nearly 2.5 years. But right now the stock is trying to make a bottom. A long bottom is a long consolidation phase is what is required for the primary downtrend to end. And yesterday there was a fundamentally bad news that hit the stock, that it is going to be excluded from Nifty. The composition of Nifty, Lupin will no more be a part of Nifty, and that hit the stock again. In fact, with this, the pharma stocks, the weightage of the pharma stocks in Nifty is being reduced to a level not seen in past 9 years. So the weightage of the pharma stocks is being reduced, and Lupin is taking the hit. So in the short term, Lupin will also remain selling candidate. It is right now trading below the 200-day moving averages. So you can sell it on rise, and the stop loss will be at around 870 region. So Lupin is another stock to be traded from the short side. So these short candidates will be good to trade if Nifty violates 11,200 region. So this is important because we have to trade in the direction of the primary trend of the market, right? The logic is that if the overall market continues upward, then the short positions are unlikely to give much profit. The weak stocks may not decline that much in a rising environment of the overall market. So in that case, we will have to trade the bullish stocks from the long side, right? And we are not shorting the weak stocks. In a reverse case, if Nifty actually violates 11,200 and descends lower, in that case we will trade the weak stocks from the short side. Those I those we saw right now, like the likes of Tata Motors, Bajaj Auto, Lupin, all these stocks. But we will, in that case, not buy the stocks those are in uptrend, like Voltas, like Bajaj Finserv. Those buying candidates may not give us good results. So we have to keep in mind the overall perspective of the market and select our stocks in that direction only. So that's the view for next week. We give you overall bullish opinion unless 11,200 is broken, and commodity sectors is likely to remain weak, and you have to do your stock selection judiciously, and you have to trade with stop loss. So with this, I conclude this presentation. I hope you have enjoyed this little presentation. Okay, let's meet up next week. Thank you.